Hey guys, thanks a lot for watching. In this video, I'm going to go over some brief Bitcoin analysis, outline my future outlook, but also some of the trades that I took last week and my rationale. With so many news events, for example, the jobless claims, also the FOMC meeting. And as I always say, it's not so much about the news itself, it's more how the actual market participants actually respond to the news. And good news does not necessarily mean you have to necessarily go long. You just have to wait and see how and react, because a lot of people have got caught out by just purely trading based on news. So last week was actually one of my most successful weeks this last month. And in 23rd of November, we had this run up to this local high to 16.8k roughly. Then we had this dump and then another high to take out this high. But when we broke initially, people were so confident that we were going back to 18k. And of course it was possible, but this in my opinion was just a complex false break. And false breaks take a while to master, but just because we've gone above a recent local high, even on the 1 hour and in some cases 4 hour, it doesn't necessarily mean that it's an actual true break. So once we went to past this, we actually dumped back below. And I actually had a really good short position, but rather than trying to predict the top in this, I waited for the momentum to change. I realized that especially with shorting, it's not so much about shorting from the highest point possible that makes you successful shorter in the long run. I feel it's more about waiting for momentum change and having a really precise stop loss. So once we ran up and we pushed back down, an option is to actually just wait till we go back below this recent local resistance and then short with a tight stop loss for like a 1-to-4, 1-to-5 risk-reward ratio trade. But in my case, once it was clear in the lower time frames, the momentum had changed and the structure had been broken on the 50-minute time frame, especially, I entered at 16,900 and my stop loss was at 16,923. So it was a really tight stop loss, but I was pretty confident at the time that it was a complex false break. So this trade was a 1-to-8 risk-reward ratio trade. And so in other words, I made 8 times the amount in profit than I actually risked. So that in turn means that this trade makes up for 8 future losses. Of course, I'm not going to be overconfident. I'm going to place a stop loss. But I just used such a tight stop loss because this, to me, was a textbook false break. Then we dumped below, and I just took profits because of the risk reward. But then we pushed back up. So at this point, it was a true break because this time we actually pushed above, and then we're bouncing from above on the support line. We pushed up. So now it's clearly a true break. I still have my hedge long Ethereum position from 1,109. And so I'm up 250% on that on 10x leverage. But I'm just letting that ride because for me that's more of a hedge long. But then I actually opened another short on Bitcoin just before the weekend. And this was around 17,063. And my stop loss is quite tight, around 70,180. Once it dumped over the weekend, I achieved a 1-to-3.5 risk-reward ratio trade. But then it came to Saturday and Sunday and I just closed off the trade because I just thought to myself, okay, Bitcoin is actually holding up quite well, relatively, despite the really weird and confused reaction to the news events last week. So I just closed my position. And then we had a run up here, just recently. It's what I was saying before, it's just never be too bearish and never be too bullish. I realized that there can always be a short squeeze. I mentioned this from 3 weeks ago actually, in a similar situation where we had this dump here and there's a clear imbalance here between this wick and wick here on the 4 hour. And I thought to myself, okay, if price comes back this region to fill this market inefficiency, I might consider shorting. And what do you know, we have this. Moves like this are not by accident. Often market makers try to fill in these inefficiencies. And so you have to always be careful when things go down, that there can always be sharp, drastic pullbacks to take out people who are shorting. So always be careful and please use a stop loss. A stop loss is not so much what is the maximum amount of money that I can lose. It's more at which point do I accept that I'm wrong. And also in this 4 hour chart in particular as well, we do have this imbalance. I've been talking about this so much. Always be careful between this wick here and wick here. So roughly between 19.2 to to 18.8k. This can always get filled. There's also a fair bit of liquidity lying on the daily chart, so you have to be very, very careful. This can easily get filled. So between this wick here and between this wick here, this huge candle, some people call it Mariposa candle, but I'm not too bothered about the names. I'm more bothered about the actual significance of the candle. But there's a huge imbalance here, market inefficiency, which has not been filled. So do not be out of the realm of possibility that we could have a pullback up to here between 18.5 to 20k. There's a fair bit of liquidity here as well, especially in the Kingfish heat maps. But just be careful. Never be too strict with your predictions. Yes, I do eventually believe that we do fall as low as between 9 to 12k and potentially 14k, but I'm not saying that it has to happen now. Be open to the possibility that we could be in a sideways range. I've been saying this for so long. 3 weeks ago I said that I believe we're in a new range. I believe that 15.5k is the new 18.5k and 17.5 to 18.5 is the new 20k. Because I'm sure most of us remember how we were between 18k and 20k for so long. And I believe this is the new range, actually. And we can go sideways a lot longer than you can remain solvent. I've got my 2 hedge longs now. So I opened a hedge long in Ethereum a while back from 11,009. But I also opened a hedge long in Bitcoin yesterday at around 16,880. After closing my short from 17,063, I will be looking for a hedge short, but so far I'm not rushing into it. I want to have a clear evidence that the momentum is changing. And those people that are rushing into short positions, all I'll say is, do not try to predict the top. You could have the highest entry possible in a short, but if your stop loss is really wide, your actual profit is limited. But if you're someone that gets much lower, but you enter with a really tight stop loss with a measured risk-reward ratio, you can actually make often double the amount that the person with the widest stop loss can make. Obviously, that does come with a better understanding of market structure, but it's just a consideration to make. But an interesting observation is that on the 4-hour, I noticed, obviously patterns are very subjective, but there does seem to be somewhat of an inverse head and shoulders. So, what's to say we cannot have a run-up back up to 18.5k? Another observation is the volume profile as well. And what I've noticed in this last couple of weeks is in particular, anytime we've had a dump to the 16.1 to 16.2k region, the volume has generally increased. And there has been a bit of demand as well. It has often been a bounce region. But an interesting observation also is that in this region here, the volume starts to taper. Here the volume increases, but there isn't actually a huge amount of resistance from 17.5k to 18.5k. It can definitely happen because the volume definitely does taper down here. And just always be careful, especially with shorting. Just do not try to predict the top in shorting. I know it's difficult. Often, many people are not used to the concept of just sitting on their hands and just waiting. Because often people come from a 9-to-5 job and the mentality is often, you have to work hard, but sometimes you have to sit and wait. And this last week was one of my best weeks this month trading. And why is that? It's because of just sometimes sitting and waiting for the right opportunity, rather than taking every single opportunity that's thrown at you. And this new rule I added to my day trading algorithm has really helped, and that is know when not to trade. We're so fixed on the idea that we constantly want to be in a trade, and this is constantly being reinforced by this 9-to-5 mentality. But this new rule I've written is avoid opening new positions on important news days, especially before FOMC announcements or CPI. And I like to wait 4 hours after the news comes out to really wait for the price to settle so that we can see how the market participants actually respond to the news. The only exception I have is that if there's a hedge long and a hedge short from the prior day, then I might leave it open. And even if the news comes out and I wait for 4 hours, it doesn't necessarily mean that I'm actually going to open a position. Because last week I actually only opened 2 trades, and both of them were really successful and really hit home runs, more or less. And so it's not so much of the number of trades, but the quality of trades I find, and especially responding. And it's about also, I think, picking your battles. You don't have to take part in every single battle that you want to. But in this particular situation, do be careful, guys. It's not out of the realm of possibility that we can have a short squeeze. Most people know that I don't pay attention to news that much, but for me it's more about knowing when not to trade. And so I always look at news announcements just to be aware of when can there be a spike in market volatility as well. Something else I talk about in many other videos is the concept of margin pressure levels. If you are interested in this, you can check it out in the description below for a referral link. So what I'm doing is I'm putting this in a recent local high. And this is looking at the habits of retail traders. So the 3x short level is 16.1k. This is the point in which you can short Bitcoin on 3x leverage and hide a liquidation point above the recent local high at 21,400. 14,300-ish is the region in which you can short Bitcoin on 2x leverage and hide a liquidation point above the recent local high of 21.4k. 10.7k is a region in which you can short Bitcoin on 1x leverage and hide a liquidation point above the recent local high. Surprisingly, the market does have the habit of gravitating towards these key margin pressure liquidation levels, which are greatly guided by the habits of really degen retail traders. I'm not saying that it has to go there immediately, but it can take its sweet time. But one of the biggest high probability setups that I've noticed is going long from this 2x short level to the 3x short margin pressure level. So in other words, here from 14k to 16.1k. Also, the next really high probability setup I've noticed is going long from the 1x short level to the 2x short level. So that is between 10k-ish to 14k-ish. It might take a while, but when it happens, be ready, is what I'm trying to say. And do not just try and predict these, always react to price. But doing the inverse, so if I remove this, and if I push this to this recent local low, what's interesting is that you can long Bitcoin up till 20.6k on 4x leverage and hide your liquidation point above the recent local low. So that's just something that's interesting as well to consider. And just seeing, okay, if people do this, is there a chance that we could run back down here again? Some patterns I've noticed as well in these last couple of weeks. Very often we have imbalances and there's a huge run up, and then the market participants just completely forget about the imbalances that have not been filled. And next thing you know is there's a dump to that market imbalance to fill it completely. And for most people, it seems to come out of nowhere. So just be grounded, I think. Do not get ahead of yourself at all. Even things are going well now. This imbalance here, this region here, has not been completely filled, and we can always return there. You just never know. And also there's an imbalance here as well on the 4 between this wick and this wick here, between 16k-ish to 15.8k. Okay, we did fill it a bit, to be fair, but these regions, these order blocks can always come back. Just always be grounded. Yes, you might now have a narrative that we might have a run up to the end of the year, but just realize that it might not go the path that you actually expect, and always be open-minded. For me, I'm just trading the ranges. It's interesting because I've actually thought about this. Does actually paying attention to the news actually really greatly improve my performance in trading? And what I found is that the best months I've had is where I've actually not paid attention to the news and just traded the ranges. But I will look when the news events are, just to know when not to trade as well. Let's look at the long to short ratio as well. So on the 1 hour, we seem to be quite balanced so far. Certain exchanges, BitMEX, are really skewed towards net longs, but more or less balanced, to be honest. Going on the 4 hour, we seem to be fairly balanced as well. Again, BitMEX, slightly net long. And on the 24-hour chart, we're a bit balanced as well. So overall, the net long pressure has slightly gone down. We are more balanced now in this recent time. So a run-up is not out of the realm of possibility. And as of yet, I'm currently still hedge long Ethereum, but I got my hedge long from around 1,109. I also closed my Bitcoin short from last week at a 1 to 3.5 risk reward ratio over the weekend, because the Bitcoin was really holding up quite well. Then I opened a hedge long with 16,880, and now I will be looking for a hedge short at the right opportunity, but I'm not going to rush into it, and we'll just see how this week takes us, really. Thanks a lot, guys, for watching. Do subscribe to my YouTube channel, which I set up recently. I post a lot of Bitcoin analysis, but also tips and tricks on how to improve your actual trade execution. I've been trading now for 10 years now, and I really try to be transparent on this YouTube channel. So do subscribe, and I'll catch you in a bit.